So, hi everyone. Thank you for joining. My name is Yaniv. Welcome to our weekly trading room. Today's Monday, August 23rd, and I've just started the recording and I'll start the screen sharing. I remind you that these trading rooms or webinars are for educational purposes only. So, of course, anything I say here is, my opinion, and have your own discretion as for any analysis I give here or any trades I take. If I take any trades, again, these are trades only for educational purposes. If I take it or if I find any trading opportunities, it's mostly on very short time frames, just for the sake of explaining, entries and risk management and some maybe trading techniques. But again, take everything at your own risk. And let's start with the majors. So let's start with the euro dollar. It has been moving in a nice symmetrical triangle in the last few weeks, and like 3 or 4 weeks ago, it broke or closed below the lower trend line. And let me just make sure that you can see the mouse itself. Okay, so it closed below the trend line and retested it and then broke down again. And on the daily time frame, you can see the retest, a very nice retest, and also the moving averages served as dynamic resistance. We'll get to dollar yen in a few minutes, Liwi. So now the euro dollar is somewhere around the bottom of the demand zone here. There's a strong demand zone. It kind of breached it, and I guess it will continue lower. Let's see how this week ends. But basically, you can see that this support line and overall the support line and the demand zone have been broken, and the overall trend is bearish now. Basically, the fact that we closed just a little below this the mid range of the double top is sort of a confirmation for the double top. And if indeed the double top is confirmed, we may expect a drop of more or less 565 pips or so, 550. The height of the double top to the downside, and we can see that there is a potential of maybe going down all the way to this demand zone. If indeed euro dollar continues lower, it doesn't happen in a day. This is a weekly chart, so it can take a few months. But if it happens, first of all, the first level that it needs to break is this level around here. Okay, we can see here previous resistance, but this is strong support. So if it continues lower, first it needs to break this support, and then the way is clear all the way to this area, and then all the way down to the demand zone. Again, it's a matter of weeks, not days. On the lower time frames, you can see that it's actually starting to form sort of a retracement and potential on the intraday chart, potential uptrend after the moving averages have reversed. This is a nice formation of crossing the moving averages and then or piercing through the moving averages, retesting them. The moving averages turn from bearish to bullish, retesting them, and then continuing up. And basically now it's starting to go higher. It's breached even the previous high. So just for the sake of this trading room, we can take a small trade with target around here. Okay, the first target should be here. Around here, there are several targets, but I guess maybe here, something like that. If I go to the lower time frames, I would probably, I would wait. What time is it now? Yeah, let's wait for like 2-3 more minutes to see how this candle closes. If it closes above this high, then I'll go long with a small stop loss, maybe just below the previous low. This pivot point. So let's see how it closes. And in the meantime, I'll just go quickly to the pound dollar. The pound dollar, so many lines here. The pound dollar broke previous lows. Let's just, okay, broke previous lows on the daily chart, but on the weekly chart, you can see this trend line here. Okay, actually, you can see it also on the daily chart. This trend line, it looks like head and shoulders, but it's not a formal head and shoulders, because for a head and shoulders at the top of a trend, the trend line or the neckline should either be horizontal or tilting up, not tilting down. But in any case, it is similar to head and shoulders, and there could be a reversal here. I remind you that the pound dollar is coming out or testing this supply zone on the monthly or the weekly chart. A very big, strong supply zone. Okay, maybe even a double top here, not a classic one, but definitely a strong movement from the supply zone. Now it's sitting on this moving average, the 50 exponential moving average. Testing it, sitting on top of it. And again, this trend line for me is the next testing point. And of course, we also have this this demand zone. Okay, there's demand zone here, not a very strong one, but still there's demand, and this area of support, more or less. It's not, again, not a classic one. So let's wait and see if once pound dollar closes below these lines, the road is clear for additional move down. Okay, so now euro dollar broke above this area. Let's wait a little bit just for it to maybe retest here, and I'll enter either with market or with a limit order. Again, this is a 5-minute chart, and I'm taking this trade mostly for educational purposes. Basically, in order for a breakout to be confirmed, we need to see 2 candles closing above the breakout level. Because if I go to the 15-minute chart, it could be considered as just a false breakout. Let's just hold on and see if there's some reaction to this level, and if we close, if we keep, or if the candle keeps moving or closing, if the candle closes above this resistance line, I'll go long. Otherwise, it's just a false breakout. Again, I remind you, the shorter the time frame, the more noisy the signals are, the more false breakouts or the more false breakouts there are. So basically, any trade I take here on the short time frames is less valid, or the signals are not as valid as on the longer time frames. But you know what? Let's even take the 2-minute chart and see. Again, this is a risky trade, but you know, the 2-minute chart, because again, it's just a 2-minute chart. But I'll take, let's say, I'll take a small trade once I see that the price starts moving up. When there's a breakout, there are, and a retest of the breakout, okay, there are several options. Option number one, enter at the breakout level. So I enter here, place the stop loss below. It's a relatively high risk trade because there's no confirmation. Maybe it's just a false breakout on the shorter time frame. But this is option one. I enter here at the breakout level, and it's a high risk, but on the other hand, the risk reward ratio is the best because the stop loss is relatively close, and the the reward can be very large or big relatively to the risk. That's option one. Option two is to enter at the breakout of the previous candle's high. So option number two, I place a buy stop around here. Yeah, somewhere around here, I place a buy stop. And if the price starts going up and crosses the previous high, then I enter. This is a well, higher chance trade. Okay, the chances of this trade to succeed are higher because now there's like a double confirmation of the trend. And then you know, I place the stop below, but the price is already moving up, so the chances are higher, but the risk is a little bit bigger or higher as well, because now the price has already moved away, and now we can you know, we risk a little bit more, but with higher chances. The last option, or the last the third option to enter is to wait for another candle to close above the previous high, like another confirmation candle. So, but it could be a very big candle, and then the risk can be much higher because the price has moved a lot more, or a lot, or farther, much farther away from the stop loss. So three options: at the breakout level, at the previous high, or at the close of a confirmation candle. Okay, as you can see, the fact that I didn't enter or haven't entered at the breakout level for now is good. I didn't do it just because the time frame is really, really low. It's like a 2-minute chart, and again, like I said, the signal is very weak because of the low time frame. Barry's asking, can we take the risk on Aussie dollar instead of euro dollar? So let's have a look at Aussie dollar, for example. So Aussie dollar, okay. Again, it depends on the time frame you're referring to, Barry. I'm not sure to which time frame you're referring, but let's see if, for example, I look at the 10-minute chart and I draw the resistance around here, okay, just as an example, then we have, well, okay, the currency strength I'll look in a minute, but we have overall on the lower time, on the, yeah, on this time frame, we have an uptrend. We have 1, 2 candles closing above, even 3, 4. Now retest, and well, within 4 minutes, we'll see if this retest succeeded. If it succeeded, then I will, I'll take the trade. Now, as for the currency strength, I'll get to the Aussie dollar in just a few minutes. I'll go over dollar yen, dollar Swiss, and we'll get to Aussie dollar. Saludos, buenos días, Rodolfo. Hola. Okay, so pound dollar, again, like I said, at the moment, it's right, it's coming out of this support line and this demand zone. And all of you, those who are trading pound dollar, just pay attention to this trend line. Okay, it's sort of a neckline. Again, not a classic head and shoulders, not a formal head and shoulders, but it's sort of a neckline. Just pay attention. In the meantime, pound dollar on the shorter time frames is, you know, forming sort of a like a cup or a reversal pattern. So on the shorter time frames, it could continue going up. How much higher? Resistance areas, first resistance area around here, okay, 137.20 or so, and you have higher zones just above with the strongest zones. I would say, yeah, this is quite a strong resistance around 137.20. And there are other zones as well above. Just pay attention in case you're going long. But as you can see, you know, the moving averages are starting to curl up. If they cross each other, the pound dollar may go a little bit higher. The moving averages cross, it retests the moving averages and then continues higher. That's a possibility for a reversal for this week. Okay. Yeah, if it goes down, very potential for those of you who are looking to go long on pound dollar, a potential trade could be around here, more or less. You can see, you know, here support, turning to resistance, and then breaking out, retest. You have the moving averages. So if the price goes down here to this level, okay, around 136.75, retests this line, this support line, and the moving averages. You have dynamic support and static support. And from here, you know, especially if you see some sort of price action in the form of doji or a pin bar, then the price could continue from here to move all the way up. Okay, like 50 pips to the next level, with a stop loss of around, I don't know, 20 pips or so. So good risk reward ratio. Again, moving averages as dynamic support, and this static support from previous areas here. This is the time frame, the H1. The moving averages I have are all exponential, the 9, 21, and 50. Okay, so 3 moving averages, 9, 21, and 50 exponential moving averages. Okay, let's have a look just on the, okay, you see that the Aussie dollar for now is not holding above this line. Again, it's not a very strong resistance anyways. But that's the problem with, actually, you know what? This is a good zone. This is a good level here. This is what I would be looking for on the hourly chart. You see that there's resistance here, resistance, breakout, retest, and continuation up. So that's a nice retest. And if the price goes down back here, that would be a nice entry point on Aussie dollar with this resistance line being tested again, and the 21 moving average as dynamic support. Yeah, and the difference, Enrique, between dynamic support and fixed support is that the static support is the support and resistance lines that I draw on a specific level or a static level. For example, this support line here is just a horizontal line. It doesn't move, and I put it because I see the price reacting at this level. Okay, I see here, you know, this wick, candle wick, and then a breakout, breaking, and then retest, and then retest, and retest back. So this is a static level. Support, resistance, support, resistance. Dynamic, when I say dynamic support and resistance, I mean the moving averages. They're dynamic because they keep changing all the time. They're following the chart, or they're following the price. They're dynamic, they're moving. Okay, they're called moving averages for a reason. And but they are serving as support and resistance. Okay, here, for example, nice support and resistance. You can see here how the moving average is serving as resistance. Okay, and once the moving averages are crossed, they can serve as support. Okay, dynamic support, support here. So I when there's a clear trend, okay, when the moving averages are open, there's a clear trend and a retest of one of the moving averages, especially with a pin bar, with a doji, with something like that, or a spinning top, a retest, then that's a good sign to go with the trend, to enter with the trend. And these moving averages here, in this case, for example, serve as dynamic support. And when you enter, you can simply place your stop loss below the moving average and continue moving it up along with the moving average, trailing stop, like a dynamic trailing stop with the dynamic moving averages. Okay, so let's have a look at the dollar yen. Dollar yen is still, like you can see here on the daily chart, doesn't have a clear trend at the moment. It's still moving sideways. I spoke about it, I think, like a couple of weeks ago on the trading room. And, you know, there's just, you see the moving averages show no trend. This daily chart is moving sideways. Weekly chart, very noisy, moving sideways. So for the dollar yen, at least, let me just clear all the noise here because it doesn't matter anyways. Dollar yen is still not very clear. Even on the monthly chart, it's super noisy, no clear trend. Unlike, you know, you can see when the trend is clear, it's clear. Look how beautiful the trend line, the moving average served as support on the monthly chart. Beautiful, beautiful. It's actually trend line, the moving average along with previous, well, yeah, not even. In any case, at the moment, dollar yen is not clear. You can see maybe the beginning of maybe of a reversal. Maybe the 9 EMA is starting to cross above and push the price higher. We'll have to see. If it does start going higher, I would like to see, you know, the moving averages open up until the, you know, but even on the weekly chart, I mean, it's just noisy. On the lower, oh, audio problem. Can you hear me? Or maybe there was a temporary problem. Let me know if you can hear me. Yeah, okay. On the lower time frame, Nick, if my thoughts, again, there isn't a clear trend. You can see, I mean, if you're looking for all the time, yeah, I'm sorry if I'm not sure why the audio keeps, maybe I should change my headset. If you're looking for shorter time frames on dollar yen, then, you know, I would just look for opportunities to you know, take breakouts and trends, clear trends. For example, here, okay, you can see price consolidation, breakout, one candle, two candles closing below a retest. And then you can take either the retest or, as I said before, below the previous low of this candle. In this case, we're going short, so it's below the previous low. And then a continuation. This is a beautiful trade, actually. But it's just, you know, catching these momentary or these intraday opportunities. It's not because the overall trend is very clear, at least not on the dollar yen. Enrique, personally, I prefer exponential moving averages, it's not it's not about better or not. I mean, exponential is just closer to the price and moves faster or reacts faster to the price changes. But it's a matter of preference. Again and again, I want to show you, just remove this indicator here. Let me just repeat or give you another example of a pattern I keep seeing again and again and again, a beautiful pattern. I really, and I gave a webinar about it maybe a couple of months ago. You can watch it on our YouTube channel. A beautiful pattern. Here it is again. It works time and again. The pattern happens when after a trend, for example, a downtrend, a piercing candle appears, like a big candle that goes through either two moving averages or even all three moving averages. In this case, all three moving averages. It pierces through them, and then the moving averages start turning to the upside after the downtrend. You see that the blue is the short one, the 9 EMA, and the red is the 21 EMA. And here already the trend starts opening up. So now the moving averages are already bullish. So the candle pierces through the moving averages. The moving averages are now bullish, and the price retests the moving averages. And when I say retests, I mean it goes a little bit higher, farther away from the moving averages, and then comes back to the moving averages, doesn't close below them, closes on top of them, and then continues up. And again, here a pin bar, a nice pin bar, a nice spinning top. So either one of these reversal candles or confirmation candles that shows you a rejection from the dynamic support, from these moving averages, after this piercing candle, this piercing bar. So pierce, retest, the moving averages are already bullish, and continuation. This pattern appears again and again and again and again beautifully. Now we have a piercing bar to the downside, and then if the moving averages turn to the downside, if the 9 EMA goes below the 21 EMA and the price retests it from below, it could be a nice move to the downside. And I'm referring to this pattern only after strong trends, okay? Not in the middle of like noisy movement, not in the middle of a sideways movement, only after strong trends. It's sort of a reversal pattern that appears again and again and again. Okay. And Carlos, good luck if you're in pound dollar. Just manage your risk properly. Okay, dollar Swiss. Actually pretty noisy as well, just like dollar yen in a way. No clear trend on the weekly chart. No clear trend on the daily chart. So again, just looking maybe for opportunities on the lower time frames. And let's see if there's, by the way, here, I mean, it's a nice example again of a reversal with this piercing bar, but here you can see that the price went below the moving averages and only then retested them again. So this is not the classic pattern I'm talking about, but if I see the pattern on other pairs, I will show it to you again. So dollar Swiss, not much to say. One word of caution on dollar Swiss, or the Swiss franc. We heard from someone who works with many brokers, like sort of a warning that maybe the Swiss National Bank, the SNB, would, I don't know, do something like it did in previous years, maybe because the Euro Swiss is going down. Euro Swiss, just one sec. Where is it? I thought it was open here. Euro Swiss. Look at the Euro Swiss. It keeps going down. Okay, the Swiss National Bank doesn't like it when the euro becomes too strong, and it might intervene just like it did in 2011. Okay, 2011, it intervened. It said it would not let, and actually it was September, but here it started already. It said no, before 2015, Conrad. In 2011, the Swiss National Bank said it wouldn't let the euro dollar drop, the euro Swiss drop below 120. Okay, it put a floor, 120. Okay, here. And so the Swiss, all the Swiss currencies jumped much higher very, very quickly because of this intervention. So Euro Swiss went up, Dollar Swiss went up, all the Swissies went up. And then Euro Swiss got stuck on 120. It went a little bit high. It continued going down. And everyone here in 2014, or actually at the beginning of 2015, like you say, Conrad, I think it was January 6th or 5th or something like that, 2015. Everyone thought that the floor, the Swiss, the national Swiss bank, the central bank of Switzerland, the floor that they put on Euro Swiss would hold. So everyone was long on Euro Swiss here at 120 with stops just below, stops, or maybe without even stops, because they thought, that the Swiss National Bank would just take the price higher. And then January 2015, the Swiss National Bank said, you know what, forget about that floor. We're not holding this pair anymore. And it dropped like, I don't know, 30-40%, yeah, like 30% a day, in one day. 30%, not 30 pips, not 300 pips, 30%. That's like, I don't know, maybe like 2,300 pips in one day, in a few hours, actually. FXCM, one of the largest brokers in the world back then, went broke. Of course, lots of traders lost lots of money, a lot of money, and lots of brokers went broke. And that was the case back then. You see, by the way, how this support turned to resistance. And from there on, Dollar Swiss or Euro Swiss kept going lower or moving lower. And now, if I draw this trend line, now we're right at this point, at this trend line. Now, if for some reason Euro Swiss goes below this trend line or closes below, there might be an intervention. Although there's also demand here, so maybe it can find demand, but expect volatility. Bottom line, what I'm trying to say, those of you who are considering trading Swiss crosses or are in trades of Swiss crosses, be very careful, because the movements can be rapid, can be unexpected, and you can, if you're in the right direction, you can make a lot of money. If you're in the wrong direction, you can basically wipe out your account, because stop losses may not necessarily help you. Okay, people put stop losses here just below 120 on Euro Swiss, and these stops were not respected because there was no liquidity. You can see this huge gap. Okay, look at this gap. So stops were just not respected. Trades were not closed, and people basically wiped out their accounts just because of one trade or maybe even a small trade on Euro Swiss because the move was so big. So that was my warning about Swiss process. As for the dollar Swiss itself, like I said, there is no clear trend at the moment, so I can't say much about it. I mean, yeah, it could, from here it could move lower, it could move higher. Not much to say. Just be careful. Dollar CAD. Wow, look at this reversal pattern. Amazing. Okay, dollar CAD moved very nicely from this demand area. Let's have a look at it. This beautiful demand area tested a few years ago in 2017, and now tested again. You see here a bullish engulfing candle. A very nice price action on top of the demand area. On the weekly chart also, there was accumulation here. You can see it on the daily chart, this accumulating dollar CAD, and then going up, retesting the moving averages and continuing up. Okay, nice reversal. But this is a nice reversal also on the dollar CAD. You can see here from this level, amazing how how it keeps working again and again and again. Look how accurate it is from this. Obviously, this is hindsight. Yeah, I couldn't know that it would react specifically to this level, but it is a nice level. Actually, I would, if I were waiting for some sort of a resistance area, I would probably set it around here more or less, yeah, something like that. Well, it's a zone, not exactly just one line. In any case, how low can it go? It can go back to these moving averages. On the weekly chart, basically the trend is, starting to go higher. Moving averages, as you can see, are turning. After here again, you can see this piercing pattern, pierces through the moving averages, retest, moving averages are turning. If the price goes back either to the 50 and preferably to the 21 moving average can serve as support. And let's have a look if we see some static zones. Yeah, basically what I would be waiting for is for the price to come back to this area. Okay, this area, maybe even the bottom of this candle, is a very strong demand zone. Okay, around here, this is strong demand, but it can find support even before that. Anyway, those of you who are looking to go long dollar CAD, anywhere around 124.70 to 125.40 or so, this is the best zone to be looking for a buy signal. Aussie dollar. Okay, Aussie dollar on the longer time frame, the trend is clearly short. Okay, I mean, you can see the moving averages. You can see how Aussie dollar has been moving lower in the last few weeks. Now it found some support around this demand zone. Okay, a nice demand zone, a wide demand zone. On the daily time frame, let's have a look again. Okay, let's just clear some of these lines. Okay, on the daily time frame, the trend is still bearish. However, coming from this demand zone with this reversal pattern or this price action could give could make the Aussie dollar move higher in the next few days. The strongest resistance area is around here. Okay, this entire zone, something like that. Yeah, more or less. This is a strong resistance area. If the Aussie dollar goes all the way up here, this could be a reversal point, and another one around here. But overall, the trend is bearish. On the monthly chart, let's just draw this supply zone. On the monthly chart, there's this big supply zone, okay, with these rejection candles, this reversal pattern. So basically, the reaction to the supply zone could drive the Aussie dollar a little bit lower, but as long as it's holding above this demand zone, it could try to move higher, okay? On shorter time frames, again, those of you who are looking to trade Aussie dollar, I would just wait for some for consolidation or retest of the moving averages, or this area around here, as I mentioned earlier. Okay, this is a nice retest area, and then the first target could be somewhere around, well, around here, more or less. You can see this rejection here. Okay, look at this rejection around here. Okay, this pin bar. So if the price comes back to this level, more or less, it could find some resistance. But overall, you know, it's just an intraday resistance. It could continue moving higher all the way to the previous demand zone, which was broken. If I would consider it inverse head and shoulders, well, yeah, not really. I mean, maybe a little bit, but the shoulders are not very clear. And I mean, it depends if you're referring to this neckline, like shoulder, head, shoulder, or if you're referring to this shoulder, left shoulder, but then there's no right shoulder. So on the 30-minute, again, the left shoulder is very clear, but the right shoulder, not so much. So, you know, it's not a, no. I mean, similar, but, or it resembles head and shoulders in a way, but it's not really head and shoulders. But again, it doesn't really matter whether it is or it isn't. I mean, you can trade it and just wait and just, you know, wait for the neckline. If this is the neckline, just wait for it to be retested. It can be a neckline or just a simple resistance line that turns to support. With the target, yeah, the target can be this height, 70 pips. The target can also be just previous resistance or previous demand or supply zones, okay? As for pound dollar, if you took pound dollar from 36.19, again, it doesn't matter from where you took. I mean, if you're long on pound dollar from 36.19, then obviously your trade is very is in great profit, and I hope you're, you know, trailing your stop. And now it's up to you. I mean, you can either continue moving the stop until it closes with the stop loss. You can wait for some sort of a reaction for pound dollar. I mean, the reaction can be, you know, can be here, or wait, just, I mean, it can react here, as you can see, but it looks like it's going to move higher because it kind of breached this area. Or it can be this area of resistance, as I mentioned earlier. And again, if you see that that it's reacting and starting to form, I don't know, a reversal pattern somewhere or show rejection signals, you can always decide to either take partial or move your stop loss higher. Okay. So yeah, again, it's there's no one truth or one solution to where you should put your take profit. And since you're already in a nice profit, you can definitely take partial profit and not be you know under pressure that all your profit will go away. Okay, so we spoke about Aussie dollar, which is reacting nicely to this demand area. Let's have a look, by the way, on the 10-minute chart. No, it hasn't retested the trend line. Let's have a look at the euro dollar. Okay. Euro dollar. Okay, basically, I mean, I would say this is more or less the resistance line. I would be, yeah, something more or less like this. Yeah, let's see if it retests this moving average or this resistance line. I would consider going long to the next levels. Okay. Kiwi dollar, again, just like the Aussie dollar, it broke below. We saw that the Aussie dollar broke below some sort of a resistance line, but here it has a demand zone. Okay, the Aussie dollar has a demand zone which holds it. Okay, the Kiwi dollar doesn't have a demand zone here. Okay, it may have maybe some sort of a support level or support line around here, but Kiwi dollar may be even weaker than Aussie dollar. So on the daily chart, personally, I would wait for Kiwi dollar to retest this line, this area. Okay, on let's say the 4-hour chart or the hourly chart. Yeah, maybe the 4-hour chart, because this is a daily zone or a weekly zone. So the 4-hour, let's have a look. Yeah, more or less, this is the zone or the line. As you can see, resistance, retest, breaking, and now I would expect a retest of this line, this level around 0.69. And once it retests it and gives us some sort of a reversal candle around here, I would be looking for a short opportunity. And again, 3 options. First option, you go short immediately once it reaches this level and closes below it. Don't enter with a touch. Okay, a touch is the most risky option, because with a touch it can just continue higher and take you out immediately, and then maybe come back or just continue. So wait for it to close. If it closes close to this line, you can take the short position with a stop loss either above this moving average or above previous high. It's up to you and the risk you're willing to take. This is option number 1. Option number 2 is that it, let me just draw it. Let's say it comes here and then, it goes down. Okay, the second best option, or the second option, which is safer, is to enter just below the low of this candle. So if it comes here, closes below, let's say here you have a candle wick, and then comes back down, you can already place a sell stop just below the low of this candle. Okay, and then you don't even have to wait. And then it could continue lower. This is the second option. And the third option is to wait for, let's say it comes here, closes below, and then comes down. Okay, then you can wait, and then you can enter at the close of the confirmation candle. Okay, but then the risk is very big. Okay, you know, you don't have to put the risk all the way. Maybe you can put the stop once. If you enter here, you can place your stop loss here. So these are the three options to enter at a retest. Okay. Let's see if we have any other. If you have any questions about any other pairs, you can write them down in the chat box. You can see that Euro Pound reacted very nicely to the support line. Okay, I spoke about it a couple of weeks ago. Actually, from the drawing here, what I said at the time was that in case the Euro Pound breaks below this line, below the support line, and retests this demand zone, then it's a great opportunity as well. But as you can see, it didn't break below this support line. It continued higher. So we may have, maybe Euro Pound will be forming a double bottom. It could continue higher. So let's see if it, you know, crosses the moving averages, and if the moving averages cross themselves, then we might start seeing an uptrend on Euro Pound, in which case either the euro starts going higher or faster than the pound, or the pound starts breaking lower and is weaker than the euro. Just a few words about yen pairs. You can see, yeah, and let's have a look at the Aussie Kiwi in a minute. Yen pairs, just very quickly, you can see that the euro yen broke below this trend line, and basically now we have this support area around here. Just a sec. Okay, so this support area around here, on the weekly chart, it closed just above the support. Okay, this support area, it closed just above it and above the 50 EMA. So it may very well find support around here and move all the way up, maybe potentially, to the moving average above on the weekly chart. We have some, you can see here, the rejection area. Okay, so it could try to move higher to this area where you can see where the sellers came. Okay, this is the rejection zone, or like the intermittent supply zone. So those of you who are trading yen pairs, Swiss yen is not clear, and as I said, with the Swiss, you should be very careful in the next few weeks. Pound yen as well, also reacting very nicely to this demand zone. For now, this demand zone is holding. Is it forming a head and shoulders pattern? Maybe. If this demand zone is broken, if it closes below it, then definitely we have a potential head and shoulders pattern confirmation, in which case, if pound yen drops below this zone, Jesus, this is a big move. It could be a very strong move, both for pound yen and euro yen, which is not, not a clear head and shoulders, similar to head and shoulders, but again, a lot of room down in case both pairs drop, and then it means probably that euro and pound are weakening, and again, dollar yen in this case could be dropping as well. Okay, It could be dropping as well. But again, the trend is not very clear. I mean, I'm not sure even that this trend line is the best trend line I can draw. But these pairs, euro yen, pound yen, look at the Aussie yen. It has already broken below the support, the demand zone, and looks like all the yen pairs are headed lower. That could give you great opportunities to take short, of course, on the lower time frames, not on the weekly or the daily charts. But you can wait for the price to retest previous resistance areas or previous supply zones. Okay, so for example, around here, lots of opportunities. If you're not sure, just wait for the next opportunity. No need to rush, but the trend is clear. Aussie yen down, and if pound yen and euro yen break below these levels, then they're down as well. Aussie Kiwi, let's just have a quick look. So yeah, Aussie Kiwi looks like, well, the trend currently is down, at least on the weekly chart. Monthly chart obviously is very noisy, or very like no clear trend on the monthly chart, but on the daily chart and on the weekly chart as well, I mean, obviously the biggest support is around here. Okay, this is the major support for Aussie Kiwi, and if it closes below this support line, then the road is clear for it to go down much lower. Okay, with some support around here, and of course a lot of support around the bottom of this candle and this whole area. But this is far away. I mean, Aussie Kiwi, it's on the daily or weekly chart, you just have to wait and see. If it breaks below, look for short opportunities. If it holds, maybe it forms some sort of a double bottom here or whatever. If it holds and starts going up from this demand zone, then start looking for long opportunities. But again, the overall trend at the moment is definitely short. It's definitely down. And if I'm looking at the Aussie dollar, as I mentioned earlier, well, you know what? I can't say for sure. Because of this demand, as long as this demand is holding, Aussie could start moving higher. And actually, Kiwi, as I mentioned, the Kiwi dollar, the New Zealand dollar, broke below this zone. So at the moment, yeah, it's it could be weaker than Aussie. In this case, if Aussie starts going up and Kiwi continues going down, then we might see Aussie Kiwi starts going up from here, from this support line. Okay, so just as long as this support is holding and Kiwi is holding and maybe showing and Aussie is holding and showing strength against Kiwi around here, then we could see the pair start going up. But yeah, as you can see, the dollar in general is getting stronger against most currencies. The dollar index is around 93.50 or so. It's an important area. If it closes above this area in the coming days, it could go all the way up to 95, 96. In which case we will see euro and pound and other currencies go down against the dollar. All right, guys, thank you very much for attending this overview for this week. And again, please trade, with proper risk management. Don't take too much risk. Be patient. As I always say, focus on trading, and the money will follow. So good luck, happy trading, and may the God of pips be with you. Take care.